Hello, everybody. I just wanted to make a quick video this morning about a stock that reported its earnings last night. And I've owned this stock for about a year. I'm very happy with it and considering putting more into my position over the next few days. So, of course, not investment advice, but let me tell you a little bit about dLocal and why I think dLocal is so interesting. So, dLocal is a stock. It's a fintech payments company that is solely dedicated to developing markets, only developing markets. And we have a lot of fintech companies that are thriving in, say, the US and Europe, but fewer that are thriving in developing markets. And this is a company that's especially good at allowing Western companies, your Microsoft, Shopify sellers. It's very good at allowing Western companies to sell in 39 different emerging markets, all with different forms of payment, different banks, different systems, different ways to load cash on various payments cards, different regulation, different legal framework. And when you are an international company who, say, operates in your country, but you operate in the online sphere, or you operate as an app, right, in the application sphere, it makes very little sense for you to go out and create a local entity in 39 different foreign markets. Makes very little sense and it's very complicated and you have to keep track of it all. Well, thanks to dLocal, if you use dLocal as a payment option, people in emerging markets can buy your products. Um, and I think this is a very interesting stock for two reasons. First of all, payments are getting disrupted. The way we pay, I mean, Visa and MasterCard, I would not invest in Visa and MasterCard. Payments are getting disrupted all over the world. That's point number one. Point number two is let's not forget that emerging markets is where uh, I mean, growth in e-commerce is everywhere around the world, but it is even bigger in emerging markets. You have emerging markets where internet is early in its adoption curve, early it's in its S curve. You have a lot of countries that are still not connected widely to the internet, where people are having their first internet experience. And so they're building a relationship with the dLocal payment brand. So they have a potential to build a very strong relationship. Don't forget also that these are countries with much higher birth rates and much higher growth rates of consumers. This is a country also with these are emerging markets also with younger people who are coming to their consuming age. So there's a lot of things to like about this company. And I also like that it's looking at emerging markets because I think one of the issues with my portfolio and with a lot of portfolios is that, I mean, I have almost no exposure to emerging markets, almost none, quasi no exposure. And so this is a way to get a little bit of exposure and a little bit of an uncorrelated company with what's going on in the US, because most of my companies are very US centric. Um, so it's one platform, one API, one contract. APIs have a modern corporation connect to each other, right? They use APIs to connect to each other. They focus on all sorts of different websites, major apps, um, ride hailing, Shopify, Microsoft, Booking.com, Wix, anything you would want to buy from an international company while being located in a developing nation, you would do. And they have actually 39 countries now. This is a bit of an older slide. Um, they have a very popular Shopify option, actually, um, where if you sit on Shopify and you want to sell to these markets, you can just add the dLocal API to your Shopify checkout page, um, and you can have people pay in their local currency with their local systems. So it's very interesting from that standpoint. And again, there's a lot of problems that we're addressing. One of them is that it's a very fragmented market with different rules everywhere. If you use dLocal, you don't have to set up an entity. You don't have to deal with the different local rules everywhere. So that's a big plus. Fraud, right? Fraud is one of the big reasons why e-payments company thrive and specialize because there's a lot of fraud in traditional ways to do payments. There's a lot of fraud, and so if you specialize in fraud prevention, obviously you're going to do pretty well. And this fits into the theme of security as well, which is a big must for any company to have. So that's a big deal there. And then you need to deal with complex regulation and tax. So tax is another big one. It's like you have to collect tax, and so okay, platforms do it pretty well in the US. Platform like Etsy and other systems do it pretty well to collect sales tax for you and remit those taxes to the local entities. But how do you collect sales tax in 39 emerging nations? Do you have 39 different teams for your big company to do that? Or do you just use dLocal? And the odds is you just use dLocal, who develops this specialized knowledge and scales this specialized knowledge to all of their customers. So I think it's a very compelling system. Very strong tailwinds in those markets, right? Increasing globalization of e-commerce. That's the big deal. I mean, we're still at about 30% of penetration. We still buy 2/3 of our stuff in person. That's going to change. Most of the stuff we buy is going to be online. So that's a secular trend. The digital economy is a secular trend, right? Apps. People want to buy apps. People want to buy digital items. People want to play games on their phone, and they want to do that everywhere, not just in the US, right? Emerging middle class, younger people coming of a consumer's age in a lot of those markets, right? Global merchants doing business, wanting to do business in emerging markets more and more, navigating everything that's complex. And then these are some of the industries: retail, streaming. Yeah, how do you pay for your Netflix subscription? Well, if you are Netflix, it's much more appealing to have dLocal and to give so many options to all of your buyers. Ride hailing, big deal in emerging markets, right? You have Didi, which is very popular, which is the Chinese app, which is very popular. That's a way for you to capture some of that market. Advertising, software as a service, right? Where the digital transformation happens everywhere. Travel companies, e-learning, gaming. I could go on. There's more industries than that. And so, what do I love about this company? Well, the report came out this morning. I didn't get a chance to see the new updated slides. I went off of the letter, the shareholder letter. But you can see they were going at 72% on the last quarter. Now they're going for a full year over year. That was a 63% year over year revenue growth, which is very high. I mean, it is twice my threshold. My usual threshold for a growth stock is 30%. This is twice, so this is really good. And then quarter over quarter, they grew 112 millions, which is very high as well. Competition. They have many local competitors, but few of those local competitors are going to be appealing to a global company who wants to have a solution for all of its market, right? Concentration. Well, they have a little bit of concentration in Latin America. It's still about 85% of their sales. But I actually think that's a plus. Latin America is first of all, that's where they're based. They're based in Uruguay. And then it is one of the faster growing emerging regions. So could be seen as a plus, but again, they're trying to diversify in Asia and in Africa. The retention rate is really high, 152% net retention rate. So you have this built-in growth in the retention rate where people just buy more. And I do believe that this is recession resistant. Actually, if you look at data from Brazil, which is a huge market for dLocal, Brazil's economy is doing fairly well, fairly well. While we are entering into a recession, I would argue they did a much better job with their interest rates. And it's doing really well. So again, I think this is recession resistant, and e-commerce saves you money. So something that saves you money at some point will be recession resistant. What is the growth runway? They estimate their growth runway at 1.2 trillion for these markets of transaction volume. So that's tremendous. They've captured nothing of that, right? So they have a tremendous growth rate, tremendous growth rate. Do they grow by acquisitions? Only small companies. I like that. I hate to see very large companies. And then this is what I love even more. Marketing expense. I want to be careful about marketing expense because, it's tough to get a return on your marketing sometimes. They have close to no marketing expense. Close to no marketing expense. Again, I love that. This is atypical for some of these digital companies. Um, like SaaS, for example, typically always have medium marketing expense. They have close to no marketing expense. Again, what's not to love about this? So growth very high. Um, Few risks, huge total addressable market, no acquisitions, and low marketing expense, low to no marketing expense. But let me move on. And this is something that I'm not used to. I mean, you're going to laugh, but I'm not used to this because uh, typically the companies that I invest in don't have earnings. But this is not the case for dLocal. dLocal has earnings. They have 11 cents of earnings. And we know earnings come with a bunch of issues. And we also know that dLocal likes to report a lot on EBITDA, which is, I mean, it's not my preferred metric for earnings. But I typically mostly only care about revenue growth. So they check the mark on revenue growth for me. I trust these companies to have their fiduciary duty in check and do the right thing once you're past the top line. That's why I mostly care and only care about the top line. That's my own way to invest. But just for fun, let's use the PE. So if you use the PE just for fun, you realize that the forward PE is going to be a 57 cents. And these are my calculations, by the way, not calculations from, say, Yahoo or anything. This is just my calculation, my numbers. Assuming a very conservative 11% quarter-over-quarter growth going forward. And what do I get? I get a 57 cents forward EPS at the current stock price of $22.54. That's a forward PE earning of 39. This is very low for a company growing at 50 to 60% a year. A 39 PE, this is very, very low for a company growing that fast with that total addressable market. So again, very, very compelling. Debt, they're anti-fragile. They have close to no debt, essentially no debt. So that means if there's a crisis, if there's a recession, we are not going to go bankrupt. That's what makes them anti-fragile. I love that. Dilution. Of course, when they went public for the first time, you have a lot of dilution as is usual, but they've kept it in check. I don't count this as any dilution. If you look at the dilution, they've had barely any. So they are keeping dilution in check, which is a big deal. The company is still founder-led, even though it had a lot of founders. One of the founders is still leading the company, and insider ownership is 9.3%. Again, lots of skin in the game. So this is a nice green flag. Finally, revenue per employee. For a company operating in emerging markets, I would not mind as much about revenue per employee being low. But again, I am very pleasantly surprised with dLocal. They make $1 million in revenue per employee. Operating in markets where labor costs tend to be much, much cheaper in the US. This is stunning. This is stunning. This is a company that I think is going to do really well in the future. This is a highly, highly, highly productive employee. The employees are used very, very well in this company. They are doing a very good job, very high productivity. So I really love that. And then of course, with all of this good thing, you see that the stock, you're gonna laugh with me saying this, but the stock is only down 36%. Only 36%. Only. Which is actually not, I mean, for this market, when you see companies like high-performing companies, superb companies, very similar to that being down like 70 or 75%, you're like, okay, minus 36% year to date is actually pretty impressive. It's not down that much, not down that much. And again, it is not surprising because the opportunity is huge. The opportunity is tremendous. So I love that. And so to answer my question and kind of go through the trademark of the channel, which is, could we see this company 10x? Could we see dLocal, the payment platform fueling e-commerce in 39, in the future, perhaps 50, 60 emerging markets? Could we see that company be worth $66 billion? Could we? And of course, we have to keep in mind that the dollar, the denominator, the things by which we assess all value, the denominator, the money stock by which we assess all value, my thesis in the channel is that it's getting diluted. $1 today is worth $1, of course, but $1 in 2032 will only buy you 25 cents of today. And so when we make this comparison as to the cost of the stock, if we can see 10x in 10 years, which is a good idea, so it's a good return, we would see that really if it was worth 66.7 billion in 2032, that would be just $16.6 billion of today if you take into account the devaluation of the US dollar. Therefore, I believe, not investment advice, but I believe this company could be a really, really good investment and a potential 10xer. So none of this has been investment advice. This is just for your entertainment. I will listen to the earnings call this evening after work. And thank you so much for watching my video and have a great day. Thank you.